En un momento en el que también hay muchas dudas con la inteligencia artificial, con el oro, que ha sido uno de los protagonistas de este año, vamos a analizar todas estas cuestiones de la mano de James Latimer-Butler, Emerging Markets Equity Investment Strategist at AllianceBernstein. Hi, James. Thanks for being with us here in Northeast TV. It's a pleasure having you here.
Hola, I can hear you well. Thank you.
James, we want to talk about the emerging markets. Why should investors pay attention to EM equities right now?
Oh, thank you for that. Well, some of us have heard lines from investors over recent years, such as, why invest in emerging markets when I can get better returns from developed markets for less risk? I certainly have, and it's a fair question in the context of 2011 to 2024. EM had a tough story during that period. It barely returned 2% a year, while the S&P 500 annualized close to 14%. Many investors only recall this lost decade, but it's easy to forget that the decade before, it was the opposite, where emerging market equities was the leader of global equity returns. But EM equities, they deserve attention right now because the macro backdrop has turned. EM has begun outperforming developed markets substantially for the first time in years. Today, it's up about 30%. That's 10% more than developed markets. We have a softer dollar, easing global rates, and a genuine earnings recovery. Valuations remain attractive relative to developed markets, with EM still trading at PEs wide to the historical discount. And fundamentals and sentiment are finally moving in the same direction. So what's different this time is the structural story. Beneath the surface, we've been seeing meaningful economic reforms, governance improvements, and healthier balance sheets. And there are a plethora of themes, some classic, like demographic dividend, some new, but digitalization. And we're seeing that these are fundamentally changing the playing field. EM markets has also matured and broadened significantly. IPO activity has helped deepen and create more liquidity and created more diverse and investable universes than we had a decade ago. Thank you.
If we talk about the countries, which region or countries are you more excited about, or where are you cautious?
Thank you. An important note that the strategies that we have at AB are primarily bottom-up stock selection. We also look at themes, but with that being said, on a country level, 3 examples on where we're constructive come to mind, include South Korea, the UAE, and Brazil. In South Korea, their corporate value up program continues to gain traction by prompting better transparency, dividends, share buybacks, and governance. The initiative is unlocking valuation upside across multiple industries. In the Middle East, the UAE continues strong investments, high-quality IPOs, and supportive reforms as it pivots away from reliance on oil. They've also made real progress in finance, logistics, and real estate, to give some examples. And in Brazil, valuations remain among the most attractive in emerging markets. Despite a challenging macro backdrop, we find selective opportunities in defensive companies across multiple industries such as banking, insurance, waste management, telcos. Conversely, on the cautious side, we remain selective in China. Policy has stabilized, but confidence hasn't fully returned. It's increasingly stock pickers market. Opportunities exist, but they're idiosyncratic, and that's exactly where we see active management mattering. With that dispersion being wide across EM, many of the strongest opportunities sit outside of the benchmark heavyweights. Active EM managers can really add value here. Thank you.
This is a year when everybody is talking about AI. What sectors are attracting more interest, and how is AI playing out in EM?
Ooh, good question. One of the standout areas is semiconductors. Korea and Taiwan sit at the center of the global AI infrastructure build-out, with memory, foundry, advanced packaging. TSMC, for example, is absolutely essential to NVIDIA, and many of these EM leaders trade at a fraction of developed market multiples, despite their strategic importance. So we could look at it as a structural, not just a cyclical story. AIM in EM can be framed as picks and shovels story in many instances, the hardware and enabling infrastructure rather than the front-end applications. Beyond tech, we're seeing renewed interest in financials and digital banks, consumer internet as domestic demand improves and rate cycles turn. And we're also finding selective real estate attractive. Importantly, you can access EM growth through companies with high cash flow visibilities, strong balance sheets, relatively lower volatility characteristics. Examples could be Samsung, HDFC Bank, and they allow investors to participate in structural EM themes in a more risk-controlled way. Thank you.
James, as EM comes back into focus this year, how do frameworks like quality, stability, price help also the investors?
Regarding quality, stability and price at AB, we look for quality of business, stability of the cash flows, and price, which is a valuation discipline and margin of safety. These pillars sit at the heart of our emerging markets low volatility strategy. We focus on companies with sustainable profitability, consistent cash flows, and attractive valuations. It's a disciplined way to identify resilient and durable businesses that are less sensitive to the macro. The result provides more downside protection and in turn aids compounding in the markets. So if we combine this QSP acronym, if I may, with the key structural trends we're seeing in EM that I briefly mentioned, we can find the framework is especially powerful today. Also, many EM central banks are ahead of the Fed, cutting rates, and balance sheets across EM, like I mentioned, are cleaner than a decade ago. And it's that backdrop that helps QSP, quality, stability, price, identify companies that can compound consistently through cycles.
We have a lot of questions. Is EM still under owned globality? Is this happening still with EM?
Very much so. You're quite right. Most investors we speak to are underweight EM equities, and positioning still hasn't caught up with the improving fundamentals that we're seeing. The encouraging thing is that emerging market equities doesn't need huge inflows to work. Even with a modest back towards normal allocations can be supportive, especially given how light positioning is today.
I would like to ask you about this context. In this context and your expectations for 2026, which strategy do you expect to do well this year?
The outlook for EM into 2026 is constructive. Fundamentals are improving, central banks are ahead of the Fed, and valuation remains attractive. It looks like a good time to get in with those things considered. And we're also entering a weaker dollar phase. Those cycles often last several years, and that can be a powerful tailwind for emerging market equities. A softer dollar and the easing conditions naturally support sentiment and earnings momentum. Even with the supportive macro backdrop, EM investors may still have some pockets of uncertainty and may prefer a smoother, more stable path to returns. And that's exactly what that QSP framework we were mentioning would be seeking to identify.
And the last question, if you had one major misconception about EM that you would wish investors would drop, what would it be?
One major misconception is that EM is always higher beta or higher volatility and driven by one or two primary macro stories. And it's simply not the case. The opportunity set is incredibly diverse and its markets are deepening and maturing across these countries and sectors. You can access the diversity benefits of emerging market equities through very high quality, lower risk companies with stable earnings and good governance. EM can broaden your portfolio, and it doesn't have to mean higher volatility. And that's a misconception we would love to see fade.
Waiting for the more info about AI, waiting for more info about the EM. James, thanks for being here with us. Negocios TV, it's a pleasure. Have you here? Thank you so much.
Muchas gracias.
Thank you.